Hey guys, what's going on? I am filling in for Citadel Air tonight. He's had a lot on his plate. I don't know if you guys have been keeping track of what's going on and what he's been tweeting about, but yeah, he's he's having a lot to deal with. So I'm stepping in for him tonight. Hallister should be coming up here at any point. And if Curtis wants to come up as well, and I also do encourage anyone else that wants to come talk about real estate or the general market, come join me. This weekend was pretty huge, actually, for the real estate market, especially for my own research, because, that's something that we're looking into, right? We're trying to plan ahead for whenever our lease is up in July of next year. And so we're kind of looking at that 6 month time frame to see what we think the market's going to be doing, right? And because you usually have to take anywhere from 30 to 60 days for closing and bids and also the mumbo jumbo and whatnots. And so we actually started looking into the real estate market from the, oh, I'll give you kind of a broad range. Basically, if you guys know where Crystal River is, down to Sarasota, out towards Wesley Chapel. So this is a very, I mean, if you're driving, right, this is going to take you probably 3 to 4 hours north to south and about an hour inland. So that's kind of the broad range that we're looking at, right? And an interesting thing that we've actually found is that houses are starting to get slashed in their prices. Florida is one of the last ones to start seeing this. Like, it started out in California, Oregon, Washington, and kind of tidal waved its way over to us because there is such an influx of people that are moving to Florida, whether it's because of, we don't have state income tax, whether it is how you, view the COVID situation, or just want to change of pace. You want to, you're coming from the north and you want the warm climate. It doesn't matter. But either which way, Florida has seen one of the highest growth rates ever. And there's no slowing down, right? Our housing supply cannot keep up with the vast amount of people that are moving to the state, which is great, but it's also putting us into a little funny predicament here with housing because our the brand new houses that they're trying to build and everything, they can't keep up because of supply chain shortages, and it's just a mess, right? So I figure Florida was a good example of the bubble really just feeling that because, I'm seeing we're not looking at, exuberant priced houses. Like, we're going from, we look at the 150, 250,000, which sadly does not get you a lot in this day and age. I remember my parents paid 100,000 for my childhood home, and it was, 2,000 square feet on an acre in a great school district. And no, you can't find that anymore. You just cannot find that anymore at all. And it's so crazy because, my parents, they're wanting to try to buy something and they're starting to look at prices. And, my mother sitting here looking at me going, where are the $100,000 houses? And I'm going, well, those are kind of the modular trailer situation now. Like, that's what those are for. And it is just kind of crazy unless you do go the foreclosure route or an abandoned situation. So, so what we're saying, we're looking at that $150,000 house, in our part of Florida, you can find a 1,200 square foot, 2 bedroom, 1 bath house on, I don't know, a eighth of an acre. Like, I'm trying not to be too dramatic about this, but that's about what it is, for those prices. But I mean, and if you go further inland, that's why we're looking about an hour inland, it does get better. You can go to that 250 mark and you'll get a nice house. You'll get, 1,800 square feet and maybe a half acre. It's really silly whenever you live this close to the Gulf and like any kind of shoreline. You guys know this. But yeah, so anyway, from this 250,000 to, up to about 600,000, we're starting to see prices of, 25, 50, $100,000 being cut off of these housing prices. So this is a big game changer for people looking to get into real estate in the next, 4 to 6 months because, and I think it was like December 1st, between December 1st and December 3rd, I was seeing these prices being cut down, and these houses now have been on the market since, I want to say the latest one was May, which is really interesting because our housing market was flipping very quick throughout 2020 and 2021. So to see a house that was listed in May still available, having been taken off, to put back on, taken off, price drop, whatever. And I think the total for one of these houses, it had dropped like almost 250,000 since its initial listing, and I think that one was in June. Curtis wants to come up. So, but it is interesting to see. So, we're now seeing the houses stay on the market a little bit longer. We're seeing more houses being able to be put on the market. We're starting to see the foreclosures coming in, and they're going through the court systems. I actually have, I thought I had it still. Let me see if I still have it up. Yeah. So this is part of one of the articles that was in the magazine, and I'll touch on it briefly, but it talks about Q3 2021 foreclosure. Actually, I'll share my screen too with you guys. For anyone that's on YouTube. I gotta get all my screens here. Sorry. All right. So Q3 2021 U.S. foreclosure activity begins to see significant increases as foreclosure moratorium is lifted. So this was an interesting thing to find when I was writing one of these articles, was that foreclosures have started to go up, just like we thought back in January when I started saying, hey, when these moratoriums stop, whenever they stop saying, hey, you don't have to pay your mortgage, you don't have to pay your rent, people would start foreclosing or getting evicted, and we are starting to see both of those things happen now. So foreclosures starts jump up nationwide. Lenders started the foreclosure process on 25,209 U.S. properties in Q3 of 2021, up 32% from the previous quarter and up 67% from a year ago. The first double-digit quarterly percent increase since 2014. This was all something that baffled me is the time it took. Where was that? Average time to foreclosure increases 11% from last year. So this is those backlogs. This is, having to wait your turn basically to have your, the foreclosure process even started or go through the courts or anything. Property foreclosed in Q3 2021 had been a foreclosure process on an average 924 days, up slightly from 922 days in the previous quarter, but up 11% from 830 days in Q3 of 2020. States with the longest foreclosure times. And so what's interesting to note about these is that people don't have to leave their homes until they are officially foreclosed on, right? So while you're going through the foreclosure process, and you're not paying your mortgage or anything like that, this is how long you have to stay in your house before the whole thing is finalized, right? And so Hawaii, the great island state of Hawaii, is 2,070 days is taking for the foreclosure process. Nevada, 1,989 days. Kansas, 1,901 days. New York, 1,659 days. And Washington, 1,611 days to complete this process. So you're looking at, let's get the calculator out here. Calculator. There we go. All right. So on average, we are Hawaii, because I can't do these numbers in my head, divided by 12. Nope, those are number of days. I'm sorry. All right. 2,070 divided by 365. You got roughly over 5.5 years that it's taking to complete the foreclosure process. So that's quite the backlog, I will say. All right, so then we also have Nevada. We know there's some craziness out there. Right about 365. All right, so yeah, you still have about 5.5 years out there. So and then Washington, we'll just do the lowest of these. Yeah, they're looking at just under 4.5 year process time to complete the entire foreclosure mess. So you got some time in these states. Interesting enough. And then you do have to note that when you are in foreclosure, you can actually stop and you can actually appeal it and you can catch up everything and not go into foreclosure. Like if you do so want to keep your house. So there is that opportunity as well. So, if you're in this foreclosure process, research that, look up what you need to do to catch up and everything. Because it is an option. You don't have to foreclose on your house just because they say you have to. Like you can always, the banks aren't wanting these homes. Remember that banks are not built to be, property holders. They're not meant to keep these assets. They don't want them. I promise you, they do not want them. It's a long time. It is a very long time. All right. So then we also have down here states with the shortest average foreclosure timelines for homes in Q3 of 2021. Montana, 94 days. You got 3 months. 3 months. That's it. Wyoming, 102 days. Mississippi, 133 days. Missouri, 213 days. And Virginia at 272 days. So less than a year for all of these. They're just kind of flinging them through. So that's kind of the craziness that we're seeing with all of it. I wanted to bring this to your guys' attention because there is a lot of houses going up. These houses will be on the market. They will start flooding the market if, investors don't start buying them up. And if, depending on, Zillow's already said they're done buying. BlackRock, done buying. These big corporate investors are not buying houses right now because they can't get rid of them at a cost that would be beneficial to them. So this is kind of an opportunity to just keep your eye out on the market, because if foreclosures, they'll be a good price. I do feel like it's literally 2008 all over again. Keep your eye on the foreclosures. They'll start popping up probably here in the next month once they get through, these 3-month time frames. Yeah, not a problem, Art. I just want you guys to see that the bubbles are starting to pop. The stock market we know is down. Crypto, we saw that take a nice little nosedive this weekend. And the thing that bothers me the most is that they keep trying to say it's okay. It's not like 08. And I mean, in a sense, they're right. It's not. It's kind of like I've been saying, it's 1929 meets 08, because we have the stock market mess. We have the real estate mess. Now we add crypto. So it's, that's what's making 2021 and 2022 kind of its own beast, plus add in COVID and all the mandates. So it is literally just something, just a pinprick away, right? So that is the catch up. That is the catch up for you guys to what we're going to talk about now. If you haven't heard all of that before. So sharing my screens again. We have Biden. Lord help us. I am sorry. I am sorry if you are someone that likes Biden, but this man has been driving me crazy trying to figure out the economy. I am sorry. I bleed. I'm a middle ground person, but I bleed red for my state of Florida, and it's oh my Lord. Biden is now targeting all cash home deals and anti-corruption drive. Okay. So this from Reuters, and I saw this actually a few different pages. They can't figure out the debt ceiling, but they're going to stop the anti-corruption with how Zillow and BlackRock and all these big investors drove up the price market on real estate 30-40% time and time and time again, to where the houses were so expensive the average person couldn't buy the housing, like, at all. Because a little known fact, if you pay cash for a house, you can skip over a lot of processes, right? You don't have to get funding, you don't have to have inspections, you don't have to do any of this stuff. And so, yeah, to an average seller, they don't want to have to go through all the inspections, waiting for someone to be financed, making sure that all their paperwork's in line, and all this other crap, right? Usually a seller isn't going to want to go through that. So if someone says, hey, I'll offer you, if you're listing it at 200,000 and someone's offering you 290,000, and you just kind of turn a blind eye and they're just saying, here's the cash, most people aren't going to turn that down. I mean, it's just common human greed at that point, and there's not much we can do about it, and then with Zillow, the interesting with Zillow, for those that haven't heard this before, is that what they would do is that they were, a lot of people use Zillow. They put in how much they think they want to be able to buy, or what they've been approved for, or anything like that. And they would track the hot zip codes, which one would be Florida. People were trying to get away from, the lockdowns and just different mandates, or however their state was being, that's a big reason people came down here, or Texas or Montana, and I think New Hampshire. Someone correct me if I'm wrong on that one. I believe those are the 4 main states that people kind of flock to. I don't know why you would flock to New Hampshire. It seems very cold. No offense to anybody that lives in New Hampshire. It just seems very cold up there. But they would use this data. They mined the data, they took it into algorithms, and they would start buying up the houses, or even calling people that haven't even listed their house or talked about selling their house, and they would offer people to buy their house cash. And they basically started setting the price for these areas. And so, they'd go and buy X amount of houses, and on that next one, they'd up the price by 20, 30, 40,000. And that now increased the value of all those houses that they bought prior, because now there's a new house on the block that they just bought for a higher price. So now when they go to sell, I'll say the 30 houses or whatever, I think is what this guy in this video said, they've now made a massive profit of millions of dollars because of this. They've increased the value of these homes by just messing with it, right? So yeah, this is kind of the funniness that they can't fix the stock market, they can't figure out crypto, but yet they're going after the corruption in the housing market from the cash buyers. Who's to say they're not using some shell company to do it? Who's to say they're not using some other person or anything like that, or finding other loopholes? There are always loopholes, because for some reason no one can figure out how to write a loop-free rules, I guess. I don't know. Anyway, Biden administration on Monday vowed to crack down on the criminals, kleptocrats, and others paying cash for houses to launder money as a part of a broader anti-corruption drive linked to this week's U.S. Summit for Democracy. Deputy Treasury Secretary Wally, whoever, I've never been able to say his name, speaking at the Brookings Institute think tanks, pledged an aggressive push against suspicious all-cash home transactions, moved to beef up enforcement and intensified collaboration with allies. If you guys, I will post this link and a few of the others in the description of the YouTube video. If you guys want to go through and click through those and read, there's a 38-page U.S. National Security Strategy Countering Corruption that was released Monday. They tried to do this despite a push in 2016 to force title insurance companies to report the identities of all cash home buyers. Nonprofit Global Financial Integrity estimates $2.3 billion has been laundered through the U.S. real estate market over the past 5 years. And then we come down here. This was actually pretty good. So we all remember the Pandora Papers, right? We just kind of got a good laugh about those recently. The latest U.S. move comes after a series of leaked documents, including October's release of the Pandora Papers, raised questions about ways that the government officials and others discreetly move money abroad, potentially to dodge taxes and accountability for wrongdoings. So they're literally calling out their own people. Calling out their own people for being like, hey, why are you laundering money? Why are you doing this shady crap over here? They're acknowledging it. So I guess that's a good thing, but we'll keep reading. The U.S. Treasury Department is crafting a new rule to close existing loopholes and require disclosures from certain types of U.S. and foreign companies to identify who is behind all cash real estate transactions and to see if those purchases are being used to shelter illegal profits. My guess is yes, because, they have the biggest insider trading. Think about that. The people that make the policies, are they not the biggest insider traders? Because they've been they sell and buy stock before things actually happen. Look at Nancy Pelosi. There's a reason there's an entire Twitter account devoted to Nancy Pelosi's portfolio. We're calling this out. And guys, this is why I am so proud of, whatever you want to call it, the ape community, the BullHouse community, the retail community, the 99% that is sticking up for what is right now. We're raising our voices and saying enough is enough. We need fair markets. We need to be able to all make money the same way without somebody having the upper hand. This is what I am so proud of everybody for this year. This is, if there was nothing else that came out of 2021, it is that the 99% is finally starting to stand up and say, screw you. It is the best thing ever. So anyway, that's my hype here. All right, so we also have Treasury wants to more oversight in all cash. The Treasury's done. So we have to remember, the Treasury's been printing out money. Printer's been going burr for a couple years. I think they're running out of ink at this point. Not literally, obviously, not literally, but they're done. The Treasury is linked to the stock market and the bonds and everything that's going on with GameStop, AMC, with the real estate market, with the crypto market. They are getting screwed 100%. And they've been footing the bill for the United States. Like, they've been literally paying our debts. They've been paying, anything that needs to be paid. And our government is still saying, no, screw you. We're going to take our vacation. We're going to go on Thanksgiving. We're going to have Christmas. We're going to, do our life. You figure it out. You like my hype? That's awesome. But I actually feel bad for anybody that works within the Treasury that's having to try to muddle through all of the bullshit, because we look weak as a nation. And I'm sure anybody out there would, anyone that's been around in the community that talks to Americans, we as a nation are looking pretty damn weak. You can't even talk about half of our news without just shaking your head. So I just won't even get into that today. But the fact that, we've screwed up international relations. I have seen so many representatives of our nation trying to mimic accents. I mean, Kamala Harris comes to mind when she tried to mimic a French accent, and it was just, oh my goodness. If you guys haven't seen it, if you kind of want a funny but terrifying thing to go watch, fine, just Google Kamala Harris Paris accent, or French accent, sorry, and you'll just shake your head. I don't care where you live in the world. You will totally just shake your head when you're soft and weak. I wouldn't say we're soft, because these citizens of America, the 99%, who we are still very, very strong. We are still very, very, very strong. And I have a lot of faith in just that, right? We are actually really starting to just fight back, and there's power behind that. But as a nation on the global scale, when it comes to what our government officials do and say, we look weak. Like France, I am so upset about how that's all transpired. Like, one of our biggest allies, and we literally just screwed them and not a word said. And I'm sorry, that was so mishandled. But anyway, so yeah, the Treasury's starting to really speak up. So this is like BlackRock, Blackstone, Vanguard, anybody that's buying, cash. They're trying to figure it out. I wonder if this also has something to do with Nancy Pelosi buying that big property down here in Florida. If anybody's ever actually heard about that, 24 million. I'm wondering if if this has something to do with that, because I'm trying to figure out how. I mean, wait, let's Google this really quick. What's Nancy Pelosi salary? Let's see. How much does Nancy Pelosi make? She's worth 120 million, apparently. She receives an annual salary of $220,000 a year. Fart on the queen. That's terrible. That's terrible skin. So yeah, there. And why? Why do you need this? Like, why do you need this big of a house? Like, I mean, come on. There has to be some kind of money laundering. There has to be something with her whole stock portfolio or her investments. There has to be something. I'll have to dig into that. Anyway. All right. So then we also have home price growth is finally decelerating. And it's just the start. So, and this is kind of what I was talking about just from researching on my own for looking at houses and seeing what the prices are and everything. Exhausted, frustrated, stretched. Those are the reasonable emotions for home shoppers to be feeling right now. After all, home prices rose faster this year than any period in the U.S. history. Between August 2020 and 2021, U.S. home prices notched a 19.8% gain, the largest uptick on record, and well above the 12-month peak, 14.1% in the lead up to the 2008 housing crash. So, ouch. 5% more, 5.7% more than right before the 2008 crash. And, that's something that Hambone was actually telling me is Chinese investors are now doing asset-backed mortgages. So that's a thing. Those are subprime mortgages. So they're keeping an eye out for that because I believe that ties into Evergrande. So yeah, this is... Let's see, home prices rose 19.5% between September 2020 and 2021. The slight 0.3% dip marks the first price growth deceleration. God, that's a different one. Dyslexia, guys, it's rough some days. In nearly 2 years. So we do have this dip starting to go, right? So we have this, and this is what is troubling, right? It should be a steady growth if it's going to be, and it actually should have been more like, wave, and it should still be like down here, right? This is not right. This is not right at all. So yeah, Redfin's growth forecast is down here. So that's interesting. Don't worry, everything is fine and inflation is transitory. Hey, I believe they actually finally said that they were going to stop saying the word transitory because it's BS. Predicting the real estate market as the housing frenzy slows down, the market may never be the same. This will just be something I want you guys just to read. These are just different realtors in different areas of the world. I shouldn't say the world. In the part of the United States, talking about how the real estate market is looking. But I don't know. I feel like this was very like cherry picked. Especially being out in Tahoe. Tahoe is one of the very expensive area to be buying a house. But the comments are really comical. I guess this was only two comments. Yeah, the bubble will pop. The economy continues to tank. The political and pandemic issues continue on. Yep. So people are waking up to it, and that's pretty good. But yeah, this is just something I'm going to include for you guys. And then this last little bit. So if I have anyone from Boise, Idaho, you guys are now the most expensive real estate market. Most expensive. I don't know what's going on in Boise, so I'd love to know. But realtor study found that the city's median home price was almost 535,000, 10 times higher than the city's median income. Ouch. Like, that's painful. Lifelong Boise resident Max Hampton and Kelsey Taylor got lucky with their new home at 414,000, and they had a lot of trouble. But they were having, like, their biggest thing was people coming in with cash buys and whatnot. So, but that's pretty much what I have for you. And I'll include this one. Is this? I don't know. This is down in Miami, and they're talking about how it's probably still going to keep going up. I expect it to go up 16% more prices. Like, the pricing is going to go up 16% more. I don't see that because of the foreclosures that we're going to be having coming into the market, especially down in Miami. Like, Miami's already hurting, and this video was released on December 6th. So I'm not 100% sure if they're just trying to calm people and be like, no, it's okay. Just like Skin said, it's okay. It's transitory. It's, it's just a, a minor dip or whatever. What was interesting before I get to Curtis, was that a couple of the listings, and you guys are probably going to laugh if you've seen the movie The Big Short, if you guys are going to laugh at this, a couple of the listings that were, I think they were like 400, 500,000, in the actual description said price to sell, motivated seller. And I'm sitting there like, I feel like I've heard that sentence before, and going, wow, they're all very motivated. And just that whole scene of them looking at houses and going house hunting and everything. And she's like, oh no, it's just a goalie. Yeah, that whole, me and Hambone and Curtis were all talking about this while we were fishing today. And it's mind boggling how history repeats itself. And listening to Kenna and how the world's going to end. It's not going to end. It's not going to end. It's just going to dip down and hurt for a little bit, but we're all seeing it come. So we just get to sit back, grab some popcorn, and watch it happen because we know what's going to happen, while everyone else panicked and freaked out, and the reporters are trying to figure out how to cover it all up. So, whatever. Curtis, what do you got for me?
Hey, how's it going? I was wondering, in your opinion, what is causing housing prices to go down now, since they're supposed to keep going up? Do you think it's the foreclosures, possibly increasing the supply, or what's going on?
So yeah, I think the market's getting ready to brace for the foreclosures, but I also think because Zillow and Blackstone, BlackRock, whoever, had come out and said that they're done buying, I think that's another market thing, that they're like, oh crap, we don't have these big investors, and now we're going to have to kind of cater to the average people. They're not going to pay these exuberant prices. I mean, I like the fact that Hambone basically let his license just kind of go to sell real estate because he was like, I can't sell houses to people at these prices when I know they're not worth this. And that's the same for Lucrative Lou. Same, he's in the Tampa Bay area. He even was like, I can't in good conscience sell people houses when I know these prices are too high. So at least there's some people with consciences out there that they just couldn't bring themselves to do it, because we know the Tampa Bay area. We know what the houses are worth. And when you see, so the house that I reside in, that I rent, a couple years ago was bought for, I think it was like 89,000. Today, right now, as the market was going crazy, would have sold for like 300,000. I'm going, oh hell no, I would not pay 300,000 for my house. There's no way in hell I would do that. So, yeah, I think the market's starting to feel the effects of just the stock market, the economy itself, the people not working, people, they're people are unemployed. There might not be the numbers aren't being reported because, their benefits are out. They're, not qualifying because of, being let go due to mask mandates or vaccine mandates or whatever the reason may be. Their numbers are not being reported. So there are actually a lot of people out of work that aren't being accounted for. Because like I've told you guys, I've been applying to regular jobs. And whenever I was looking at kind of the competition, I guess you could say, the other applicants. Like there's some jobs that had 300-400 applicants, and there was others that had 500 to 1,000 applicants. Like there are people looking for jobs, there's people looking for work, but they're still saying, oh, unemployment's down. You wouldn't have this many people applying for these jobs if the unemployment rate wasn't still very, very, very high. So I don't know. It's very interesting. Let's see. Skin said y'all went fishing. Where's the invite? Are you in our area, Skin? You're more than welcome. Come fishing with us. We didn't catch anything. We kind of got ate up by the bugs, if anything. But yeah, if anyone's in the area, if anyone's in Tampa Bay, you guys are more than welcome to come fishing with us. We'll just get like a big fishing party going. I live in the state on the other end of I-75. Would be a long fishing trip. Yeah. You're still more than welcome. But yeah, we had a lot of fun fishing today. Did I answer your question, Curtis?
Yes, you did. Thank you. And yeah, it was awesome fishing today. Like we did not catch a dang thing, but the weather was beautiful. The scenery was beautiful. It was just relaxing. It was much better than hanging out on Twitter all day or looking at the charts all day. But it was a nice getaway. It was fun.
That was a lot of fun. And I mean, but that's what's so funny is that we didn't catch anything, but man, they were jumping. Those fish were just going crazy. We're like, oh, there they are. Oh, there they are. Nope. They just weren't biting.
And we saw dolphins.
We did see dolphins. I think either two or three dolphins. Those were beautiful.
Yeah, there's at least two of them.
Mm-hmm. It was a lot of fun.
Yeah.
Robert Linsky, Almost Buddha, KMO, Hallister, Ebo. I don't know if I said your name right. If you guys want to come up real quick before we get ready to head out of here, because that's all I have for you guys. That's the real estate bubble in a nutshell. I hope I could bring some information to you that you hadn't heard yet. But yeah, I will cover this more tomorrow. I have, tying it into Evergrande, tying it into just kind of what we're seeing and how to kind of, really just brace for it, like what to kind of look for, because it is actually hotels. Your guys' homework. I'm assigning homework if I can do that. Look into hotels and multifamily properties. Look into the pricing and how they're going, because there might be a play. There might be a play there. Hi, how crazy would it be if, while we are squeezing on the way up, people start getting lots of puts for when it goes down, and when it's going down, people start selling calls for when it goes up. So I will address this. One, that's very risky. It is something you can do. I'm probably the only person that's in the community that will actually ever say that. It is something you can do, but it is a very big risk, because you do not know how the bounces will be. It could, you could have say we're, because we know it's going to be ups and downs and ups and downs and ups and downs, right? So, we squeeze to 1,000 at first, and then you get, and we see that it's getting ready to come back down, to 500 or 600 or whatever. And you buy a put for 650, right? If it doesn't really get close to, like, if it's like coming down from 1,000, it only hits 800, you could still be out a ton of money. And now you're trying to chase, making up the money. It's when it comes to short squeezes like that, yes, it is a possibility, but you have to be impeccable with your TA. Pretty much being able to guess how they're going to cover, how many people are going to buy in, who's going to, sell off, or whoever is going to do what. Like, you'd have to take the whole broad picture into it. So like I said, it is a possibility, but I don't know. risk management on that is a very big risk. Like, I think honestly, when it comes to that type of thing, I think I'd rather go play the VIX or the UVXY or something like that. I would rather go play with those because the market's going to be a little bit more. You just know the market's going down if I shouldn't say if, when AMC, GME are going up, plus BlackBerry and all those, the market generally will be on a downtrend. So the inverses would be probably a safer call, put, play than AMC, GME. Just in my opinion, not financial advice. Don't hold it against me. Just put my 2 cents out there. If any, Hallister's up here. Hey, Hallister, do you have something to add on to that?
Hey. Yeah. Yeah, I mean, well, especially like if it's in the middle of a major event, then IV is going to be through the roof, right? Like I've been in situations where I was playing with this, a stock like that I knew was insanely overvalued at the time, and it was in kind of like a short squeeze situation, and it was up probably 5 times what I thought it was worth, and so I bought puts around where I thought it was worth, but even though the price started plummeting, like the value of the puts weren't going up because one, like, I mean, part of it's just supply and demand at some stage. Like, I don't know. I mean, I've played with different kinds of options on different stocks where, like, theoretically, if you're looking at all the Greeks, like, it should be moving a certain way, but it just isn't because maybe the options aren't super liquid, or there aren't that many people interested, or you just get IV crush, right? Where you're in the middle of an event. Like, I mean, earnings is one of those big things. I mean, so like with GME, we have earnings coming up Wednesday. So, IV on options this week are going to be quite a bit higher because they have a major event coming up. And then as soon as they report and the market kind of reacts to that, the IV is probably going to decrease. Now, I mean, less so with GME than what you probably see on a lot of other stocks, but it's just I don't know. It's really difficult. Like Kenna said, I mean, you kind of have to time it, right. You have to be spot on with the TA, and I don't know. I mean, I don't know what kind of options you're talking, like like weeklies or a little further dated, but even so, I mean, it's just one of those. You can always kind of gamble on it, but I mean, it is more akin to gambling, I guess.
Yeah, I would definitely say that. And thank you again, Adrian, for the $10 super chat. And you are an incredible human being. You're an incredible human being. Yeah, I appreciate you guys sitting through the real estate fun stuff. I think this is where I'm getting excited because we're finally getting into the more broad market information because it's starting to really come into play. I know you guys have been hanging in there with me since May when BullHouse was incepted, talking about broad market, saying, hey, Q3, Q4, we need to start looking into this. Q3, Q4 is actually, we're in Q4 now. Optimistically Q1, but we didn't make it there. We're going to start seeing the fallout, I think, in Q1, obviously. So kind of, I'm going to try to write up an article for the website so that everyone has everyone has access to it. I think I'm going to do like every other week for right now, just so I don't really burn out since I'm writing articles for the magazine, I'm writing DD, I'm writing all this other stuff. So I'm going to try to do it probably by the end of the week. But kind of a new year, what to look for type thing, if you guys are interested in that. Just things that we're seeing, things that what comes in with a new year and Q1. Q1's always interesting. Speaking of, I have a prediction. And I don't do predictions usually. January 22nd or 26th, I think something big will happen with GameStop and AMC. I'm putting it out there just based on some different things that I think. January 22nd, 26th, I see something kind of funny being in there. History repeating itself because, well, last year. I'm marking this down. I'm recording it because if it does come into fruition, I will probably just have to have a good laugh. If it doesn't, I'm wrong and I'm okay with that. And I will come out and say, well, guys, the 22nd to the 26th, nothing happened. That's fine. But it's just, those are dates. Those are the dates I'm seeing for different things. So I'm putting it out there. I'm not saying if it's good or bad. I just think there's something with those dates. So, all right, that is all I have. I will see you guys tomorrow at 10 p.m. Actually, no. Sorry, I lied. I think we're going to start at 9 p.m. tomorrow. Actually, 9 to 11, roughly. So we can cover a lot of stuff. So, Alistair, Curtis, anything you want to say? Final thoughts?
Yeah, I have a prediction as well. I believe that we will catch at least one fish apiece by January 22nd to the 26th
I hope so.
at Eggport Park.
I really hope so. I think it'd be pretty pitiful if we go an entire month and a half without catching a damn fish.
Yeah, I might lose my nickname, Kurt Angler.
Oh no. Oh, Skin said apes triggered. Oh my god, dates. I like dates. Yeah, that's just my prediction. Alistair, you got something?
Not too much. I mean, I think it was, the real estate thing was good. Like you said, I think it'll be interesting to get into a lot of this other stuff, like what we see happening with real estate, what we see happening with employment. I mean, somewhat as it relates to the market, but even more broadly. I mean, I'm really curious to see, how this plays out, because as it does play out, I mean, I see it being, I don't know, I think it's huge. I mean, it could be, it's a test of some of the theories of capitalism and some of the theories of economics, if it's allowed to play out, because I just don't think that we've seen quite this kind of situation in a really long time, where you have so many catalysts just kind of coming to a head. So I mean, I certainly don't know what's going to happen. Trying to figure that out kind of day by day, like in terms of the markets and everything like that. But I do think it will be a really interesting time here coming up.
I'm right there with you. Right there with you. All right, guys. Good night.
Yes.